Good morning. Welcome to Stock Market Today for Wednesday, July 29th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. We also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were lower in Tuesday's trading, finishing near the worst levels of the day. The defensive REITs and utilities were leadership at the sector level, while materials and energy lagged. Treasuries were mostly stronger with the curve flattening. The dollar was stronger versus the euro, but lagged the yen. Gold finished up 70 basis points to a new nominal high. WTI crude settled down 1.3%. As we get to the desk this morning, futures are up about 20 basis points with the FOMC meeting on deck. It's not expected to be a meaningful event this time around. Asian equities were mixed overnight. China gained over 2%, while Japan lost more than 1%. European equities are mixed as well. Treasuries are slightly weaker. The dollar is weaker on the major crosses and sitting near two-year lows. Gold is up 50 basis points. WTI crude is up 1.1% to kick us off on Wednesday as we are grinding below that breakout level, that 3250 level that has been such a burden to get through. We remain below it after fading into the end of the day yesterday. Support down below in the 3000 to 3100 area remains in place. Below that, 2850 to 2950. But we'll cross that bridge when we get there. Resistance, I've kind of moved it down here a little bit because we have had so much trouble breaking through 3250. So 3250 to 3350 on the upside, that is the range. So as long as we're above support, which we are, I think that the February highs are in play. There is still a small divergence in play when we look at the indicator, the CCI 13. As it works its way towards an oversold condition. At the same time, Chaikin money flow is bullish. So not a lot has changed here, really, when we think about the structure of the market. Choppy, grinding trading ahead of, I don't necessarily think the FOMC meeting is going to be much of a catalyst one way or the other. I think the bigger catalyst is tomorrow when we hear from the likes of Amazon and Apple and Facebook and Google. EA, other important names. We've touched on this week. So I think that tomorrow has more of a possibility of being a catalyst than the FOMC meeting does today. As we dive into our market in a minute, stocks closed lower ahead of the FOMC meeting as choppy trading continues in the near term. We've been walking through it all week. Sentiment remains more greedy than fearful in the options market. That's been in place for a while. Momentum, MTUM. It's a very bullish fund that it's oversold here. Based on our work, we're featuring it in our note today. And as I said, futures do point to a higher open ahead of the 9:30 bell this morning. Taking a look at the major indices now from a power bar perspective, we have the Dow lost 76 basis points yesterday, 8-5 bulls to bears there. S&P 500 down about 60 bips, 154 to 80 bulls to bears on that front. NASDAQ small underperformer, 40-7 bulls to bears. Small caps also underperformed on the day, down 1%, 580 to 305 bulls to bears there. Down tape, bonds tick higher, sending yields lower. And as I said, it was your REITs and your utilities, your bond proxies really, that were leadership yesterday. REITs up 2%. But still a bearish ratio there on the power bar, 3 bulls for 15 bears. So according to the power bar ratios, small caps and large caps remain bullish. Major markets across the board are mixed. Let's hit our stock of the day now. This one's kind of interesting to me because everything that's kind of levered to the home supply chain, right? Whether it's the home builders, whether it's some of the stores, the specialty retailers, have been doing really well. And we'll take a look at that chart a little bit later in the show. So I see an opportunity here in a name like Sleep Number, SNBR, the ticker symbol, as it pulls back following their earnings announcement. Very bullish stock, strong trend, strong industry group, above the rising long-term trend line with clear support here, in my opinion, at around the $40 level. You can kind of shoot against it, if you will. Oversold in the near term based on our overbought, oversold indicator, while Chaikin money flow remains bullish as it has been since the end of May, beginning of June. So when I see a setup like this, we've gotten earnings out of the way, it looks somewhat compelling to me as a potential long idea, especially when other names that are related or somewhat related to the theme have been performing so well, possibly just overlooked here in the near term. Obviously, a nice run off the March 23rd lows, much as everything else has. But I think that this pullback to a 21-day-ish moving average is a compelling setup. If you're looking for potentially bullish ideas that are levered to a theme that seems to have some traction to it. So take a look at SNBR as a potential long idea today. I'm featuring it in my note and here on the show. Sector tracker now, movement of the major sectors over the last 5 days. So in light of the choppy trading, in light of the inability to get above that 3250 level, we've kind of pointed to the fact that we could see some near-term choppiness, and that's largely played out. But what's interesting to me is that it's playing out with leadership in the defensive areas of the market. Real estate, staples, utilities are the only three sectors that are higher over the past 5 days, right? That's bond proxy, that's defensive leadership. Just something to be aware of as we continue to fail to get back above that 3250 mark. Healthcare, materials, industrials, discretionary, also lower, kind of middle of the road. Energy, back at the bottom of the list. You know my feelings about energy. I've kind of just laid them bare as much as I possibly can. Comms and tech are the two groups that I think are going to be really in focus. We have some of the big, consumer-facing tech companies in Washington today, and then we have that huge day of earnings reports tomorrow afternoon. So, as I said, I think that's your catalyst here, one way or the other, for how this shakes out in the near term. Financials also near the bottom of the list over the past week of trading. Now, our industry in focus, aerospace and defense services, and this is one we haven't liked. You've heard me talk about it here in the past, and with good reason. Over the past 6 months, it's lagged the S&P 500 by about 22% and still has a weak power bar ratio, 9 bears for 4 bulls. Ranks at number 19 of 21 subsectors, although it has moved up one slot over the past week. That's not really all that encouraging. Some of the indicative names there to avoid or potentially look for bearish opportunities if you do trade to that side of the book. TransDigm, TDG, very bearish rating. Axon Enterprise, AAXN, with a very bearish rating. And Cubic, CUB, with a bearish rating in our model here at Chaikin Analytics. And if I take a look at the fund, XAR, bearish ETF rating, and a weak trend as it has now dipped back below a declining long-term trend line. Money flow is bearish. Overbought, oversold indicator beginning to turn lower in an overbought condition. So to me, if this was a stock, I'd be saying to avoid it or potentially look for bearish opportunities. It's a fund, so you can look for bearish opportunities there, or you can drill down on some of the holdings and see if there are any setups. Look at the underperformance relative to SPY, really lagging for the most part since last October. Brief blip in the November timeframe, but just a laggard, right? So bearish stock lagging the market, a bearish fund lagging the market. The analysis shakes out in the same way. Just a group that just doesn't make sense to me to be paying a lot of attention to on the long side of the portfolio. There are so many better looking themes and groups and sectors out there. If you're looking to add bearish exposure, it's not here that I think it makes sense to do it given the underperformance. So we're avoiding XAR, or we're looking for bearish opportunities within the group should those setups present themselves. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers. Norwegian Cruise Line, nothing company specific there. And the gainer side of the board has a very kind of reopening / let's buy the beat down Corona names. And okay, there's been volatility on both sides of the ledger in these names. So nothing company specific in Norwegian, up 6.25% yesterday. VTR, healthcare REITs had a good day. Also, some news as it relates to VTR and maybe kind of renegotiating some of their rents. VTR has actually turned bullish here at Chaikin Analytics in the near term, so I'm going to have to dig in on that one a little bit further. Up 5% yesterday. REG, right, the REITs were strong yesterday. REG up over 4.5%. PSA, a sell side note to go along with the strength in REITs, sends that stock higher about 4.5%, still very bearish here, as is Carnival Cruise Line, CCL. Very bearish stock here at Chaikin Analytics, up 4%. 4.2% yesterday. On the loser side of the board, LW, their EBITDA missed, and investors honed in on that, took the stock down 11.5% yesterday. National Oil, well, Varco reported earnings, part of that energy group, down 11%. F5 earnings report for this bullish stock down 8% yesterday. ECL down 8.5% plus following their earnings report, and a little under 6% to the bad for MLM, neutral stock on the heels of their earnings announcement yesterday. So we're in the heart of earnings season, and we're actually to the point now where the micro is more important than the macro for at a company level, if you will. Yes, there are still some themes out there playing off of the macro, but we very much are still in the heart of earnings season, and that is what's driving near-term trading. You'll see it in names like Shopify this morning, AMD, which reported last night. Right, it's a micro market right now, and getting on the right side of that, it trumps the macro. For the near term, options traders remain bulled up. Let's dive in. On Wednesdays, we dig in on market sentiment, and I kind of always caveat this with sentiment is a poor timing tool usually. For me, it's more about creating an environment. To me, it's very much like valuation. What kind of environment are we in? A lot of people like to say, well, stocks are expensive and they have to go down. Well, no, they don't, right? It's just the environment that we're in. And ultimately what needs to move the stocks from that environment, within that environment, is some sort of a catalyst, right? So if we think about valuation, it's expensive. It can stay expensive until there's a catalyst that wakes people up to the fact that, hey, the market's too expensive. I feel like sentiment is similar in that regard, in that it's an environment. There's excess greed in the market as it relates to options trading. When we look at the 13-day moving average of the CBOE equity put call ratio, but that's been well founded at this point. Markets have gone higher. If there is some sort of catalyst, though, what I fear is that people are not protected, right? Then there'll be this dash for protection, this dash to lighten up that then could exacerbate any downside. So it's more about getting in the mindset of this is an environment that we're in and being mindful. How do you be mindful of that? How do you prepare for that? You work through your process, right? You continue to identify your setups. You make sure you have a solid risk management process in place, right? We don't know. It's not about guessing. It's not about feel. It's about having a process that involves solid risk management. Take a look at the VIX as well, trending lower now, back well below the peaks over the past 5 years. So sentiment more bullish, more greedy than fearful, relative to what it has been of late based on our work here today. At the same time, I would note that futures traders continue to cover their short positions. Now, I said we'd talk about momentum. Momentum kind of closely aligns with growth, although they are not the same. MTUM, the iShares MSCI Momentum Factor ETF, a very bullish rating here at Chaikin Analytics, as it consolidates above the breakout level, above the 200-day moving average. Clearly defined level here above the February highs. If you're above that level, I think it makes sense to start looking for ideas within the holdings of this fund. Take a look at the RSI, holding bullish ranges on pullbacks. On a relative basis, we have a pullback to the breakout level that is holding thus far. So to me, again, it's a process. It's clearly defined here. You can look for ideas and then manage your risk. Take a look at MTUM, drill down on some of those 37 names that are bullish within our model here at Chaikin Analytics for some potential opportunities. As you know, my view is that I think the growth and momentum theme is likely going to reassert itself. And I said we'd touch on the home builders. Take a look at XHB. Bullish ETF rating here at Chaikin Analytics, 19 bulls for only 2 bears for this fund that is also clearly holding above the breakout level, and kind of testing it here in the near term. If I wanted to, I could have drawn another line, but I didn't want to cloud up the chart. Working off an overbought condition while the RSI has shifted into a bullish regime, and the fund has broken a near-term downtrend, or actually a longer-term downtrend relative to the S&P 500. So gets back to Sleep Number and the things that are levered to this home builder supply chain. So that'll wrap us for today. Head over to chaikinanalytics.com/test drive to take us for a free trial. I'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.